Greetings. Today is Monday, November 27th, 2023, the Monday after Thanksgiving, Cyber Monday, I guess, as it has come to be known. And later this week, I will plan on shooting a longer video, the typical monthly market monologue, where I will go into a little bit more depth. However, I thought a brief update would be appropriate to let you know one of the things that has us a little concerned. Underneath the surface, we like what we're seeing. However, one of the things that we're a little concerned about is tax loss harvesting. For those that don't know, tax loss harvesting is something that a lot of advisors do or that they advocate for. It's like, hey, Mr. and Mrs. Client, the year end is approaching and let's go ahead and sell position X, Y, or Z because it's got a loss and we can use that loss to offset gains, et cetera, et cetera. In general, we believe that practice is largely silly. We don't really wait till the end of the year. We want to minimize our losses throughout the year. So we tax loss harvest all year long because, again, if a position moves higher, we can always buy it back, and we do not want to let losses get away from us. That said, it is still a fairly prevalent practice throughout the industry. So as December is approaching, one of the things that we're cautious about is tax loss harvesting. Now, on the screen right now, I've got two lines. They are both the S&P 500 ETF SPY. The top line, the blue line, is the current year, and the bottom line, the green line, is 2018. And 2018 in particular was a very choppy year. It was a lot of sideways action. You can see that very easily on the screen. When I was thinking about this, I was reminded about 2018 because this year has also been very, very choppy. Yes, the S&P 500 is up approximately 19-20%, something like that. But as you know, if you've been watching our channel, the majority of that 20% return in the S&P 500 has come from the Magnificent Seven stocks. When you look at the average stock in the stock market, in the United States stock market, it is negative for the year. So as we come into the year end and we think about the possibility of tax loss harvesting, while we like what we're seeing underneath the year, the possibility of additional selling simply to realize those losses has definitely got us still on our toes. Now, in 2018, one of the things that I would also highlight is there was this downdraft really started in October, and then the day after Christmas, the S&P began a fairly significant rally. So no predictions here, but this is something that we're looking at and trying to be mindful of, that because the average stock has got a loss for the year, we would not be surprised if we see some additional selling, creating additional volatility. The other thing to mention, I won't show you a chart on this, but one of the things that we monitor is the VIX. The VIX is a measure of volatility or fear in the marketplace, and right now it is very, very low. And simply from a reversion to the mean standpoint, when something is that low, it's abnormally low, it tends to suggest that it's going to revert higher. Put those two things together, we might see some extra volatility in the days and weeks ahead. But I would not be surprised if that is short-term noise to be followed by a rally. Remains to be seen. But again, we'll go into more detail when we shoot the monthly market monologue video. Hope you'll tune back in for that. Until then, thanks for watching.